A community activist group today issued a startling report on what the foreclosure crisis is doing to property values. The group estimates that by next year, California real estate will be devalued by $650 billion. San Francisco properties will be worth $6.9 billion less. Home values in Oakland, the hardest hit city in the state, will drop more than $12 billion. The Alliance of Californians for Community Empowerment says when a home goes into foreclosure, its value drops an average of 22%.
So when you have foreclosures in general, people are abandoning properties, people are losing their homes, it brings down property values in that area, but it also helps to bring down the reputation of the whole city.
The report says the typical foreclosure also costs local government nearly $20,000 per home.
Well, in the meantime, settlement talks are underway with the nation's largest mortgage companies, and they could wrap up as early as this month. 7 on Your Side's Michael Finney is here to explain what a settlement could mean for homeowners who are just struggling.
Yeah, a lot of people don't even know about these talks. These stem from an investigation launched by the nation's attorneys general. The mortgage servicers are accused of submitting foreclosure documents signed by those who hadn't confirmed the accuracy of the paperwork. The practice is known as robo-signing, and a settlement could provide homeowners with some much-needed relief. Shirley Burnell has lived in this Oakland home for 4 decades. She's been fighting foreclosure for 3 years.
We've been doing the same paperwork for years. It's over and over and over and over. So I don't know what the issue is.
Donna Vieira has been in this San Leandro home for 15 years. The numerous books and games belonging to her 6-year-old child are a pleasant distraction.
It's an escape from the anxiety we have.
Shirley and Donna are 2 Bay Area homeowners who could be helped by any settlement. California Attorney General Kamala Harris is part of the team trying to negotiate an out-of-court settlement.
I'm very confident because everybody is aware the situation and the pressure is on.
I want them to get help for the homeowners, but in that realm of trying to do that, I would also like to see some people prosecuted.
A document dated March 3rd and obtained by the LA Times reveals some potential terms of a settlement. Key among them is principal reduction. Basically, banks are being asked to reduce the amount homeowners owe to bring it closer to the value of the home. That's something banks have long resisted. Norma Garcia is with Consumers Union.
Too big to fail doesn't mean you're too big to do the right thing. And that's really what ought to happen here, and we need to see more of that.
John Eller of the Alliance of Californians for Community Empowerment has been following negotiations closely. He says one holdup to any settlement could be the insistence by banks that they be protected from any future litigation.
They're starting to pull back from the table, and so it's hard to say what's going to happen next.
The Mortgage Bankers Association and American Bankers Association declined to comment for this story. But it's been widely reported that the banks have offered a settlement of $20 billion.
It's not even enough for California based on what's been done.
We will see what it looks like when it comes to fruition.
If a settlement is not reached, we could be looking at years of litigation and more federal and state investigations. The services involved in the talks are Bank of America, Wells Fargo, Citigroup, J.P. Morgan Chase, and Ally Financial. We will, of course, be keeping track of this.
All right, Michael, thank you.
Sure.